Hello and welcome to Startup Street. I'm Arundhati Ramnan and these are the top headlines from the startup world. Co-founder and CEO of Greek yogurt maker Epigamia passes away. Rohan Mirchandani, who is in his early 40s, suffered a cardiac arrest. Mirchandani's passing follows the untimely deaths of Pepperfry co-founder Amrish Murthy and Good Capital's Rohan Malhotra. EPAC Prefab, a turnkey solution provider for pre-engineered building, prefabricated modular structures and insulation products, has bagged $20 million in its first funding round from GEF Capital Partners. The funds will strengthen the company's manufacturing capabilities and will be used for capex expansion. Semiconductor startup Mindgrove has secured Series A funding of $8 million. The round sees participation from Rocketship VC, Speciale Invest and Mela Ventures, while existing investors, Peak 15 Partners, Whiteboard Capital and Nischay Goel have stayed on board. Enterprise SaaS fintech leader Hostbooks has raised $5 million from Orange Orbit LLP in its Series B funding round, with the first tranche of $2.5 million already disbursed. The latest funding will support Hostbooks in scaling its international presence, expanding its product offerings, integrated advanced AI-driven modules. Elon Musk has raised prices of its top-tier subscription service for his X social media platform by a massive 35% for both new and existing users in India, including across global markets, effective from December 21st. The Premium Plus users in India will need to shell out 1,750 rupees a month from 1,300 rupees currently. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Bangalore-based full-stack consumer engagement platform Exotel has turned a profit with positive EBITDA in the third and fourth quarter of FY24. Now, the company pared down its annual losses by 65%, while revenue inched up from 420 crore rupees to 445 crore rupees during the same period. Now, started in 2011, Exotel allows companies to manage customer engagement through an omni-channel contact center, a suite of communication APIs, and a conversational artificial intelligence platform over the cloud. Joining me now to discuss this further is Adarsh Dikshit, the CFO of Exotel. Adarsh, thank you so much for taking time out and being here with us on Startup Street. And congratulations on this feat that you've achieved as well. So as I just pointed out, you turned a profit in FY24 and managed to see revenues also inch up marginally. If you could sort of take us through what contributed to your growth in this financial year?
Sure. Thank you for having me on CNBC. Just a small correction. We have reduced our losses in FY24 compared to FY23. Of course, we are aiming at profitability in the coming years. With that context, what has changed for us in FY24 that led to obviously a drop in our losses by 65%? One, of course, is our leverage or our margins. Our margins are very respectable in our industry. In fact, perhaps the best. Then, of course, would be the balancing of our capacity that perhaps was true for most of the companies, not just us. With the demand tapering, quite naturally, we had to balance our capacity. So we had a forward view of that way back in early 22-23, and we were able to execute those. And quite naturally, because of that, we were able to reduce our losses without compromising on our gross margins.
Right, absolutely. And are you on track to maintain this for FY24? If you could sort of, take us through what you will double down on in FY25 and your targets for the year as well?
Well, I may not call out the targets for FY25 because we are a private company. To that extent, I have to be mindful of it. But I can certainly say that our path in FY25 certainly is to further reduce our losses. In fact, we will be entering into the profit zone in FY25 and way beyond that. And that continues largely from our optimization of our margins and further optimization of our capacity. So those two continue. But most importantly, in FY25 or even in good part of FY24, the focus on high gross margin products and innovation, certainly these two have given us the segue for better margin profile in FY25 and beyond that.
Right. And, you're a full stack consumer engagement platform, right? So you've been talking about these high growth products that you have. So can you take us through what you have on offer and what's the tech edge that you have and any new products in FY25?
Certainly, yes. In fact, the space that we are in is up for disruption because of AI. So wherever you have disruption, obviously there are opportunities. So to that extent, most of our customers are asking for the AI supported products. To that extent, we already have a customer base whose needs are something that we understand really very well. We understand the journey very well. So to that extent, we have augmented our product with the AI intervention. So that certainly is a hedge, not only just in terms of protecting our margins, frankly, and also to expand our margins. So if I were to call out, the intervention will be largely in terms of how do we bring AI into our existing products, and as well as an additional AI intervention to create value for our customers.
Right, and if you could sort of take us through your presence, then you're present, you saw massive expansion in the last year. So you're now present in UAE, Saudi Arabia, as well as the US. So what's the expansion plan for this year, and how big of a market will India be for you? If you could also tell us, the revenue mix between the geographies?
Oh, certainly. India, which is domestic market for us, continues to be a very exciting market. The growth opportunities are certainly limitless for us, or for many of those who operate in Indian market. So Indian market will continue to be of great interest to us, and we certainly see growth coming from the Indian market. Having said that, international expansion is also a natural adjacency for us. So to that extent, UAE or the Kingdom of Saudi Arabia, and Africa, Indonesia, or the Southeast Asia, these are all quite exciting markets for a variety of reasons. Number one, these markets are growing as we are growing. The problems that they are trying to solve in terms of customer engagement and customer experience is quite similar to what, let's say, the Indian domestic market has solved and continue to solve. So we already have product stack that we have established in the domestic market, and successfully so. So taking this to the adjacent market is a very natural act. It's not a leap of faith for us. It's a natural progression for us. So, the international markets hold great promise for us in terms of our ability to go and sell an established product that we have in domestic, and adoption rates should also be quite significantly high in international markets for us.
Right. And what about the clients you cater to? You have over 7,000 clients globally, facilitating over 25 billion conversations, right? So if you could expand on how you plan to grow this further, and your client acquisition strategy, as well as, the kind of efficiencies you've created for your clients.
Well, let me break this question into two parts in terms of, let's say, how do we expand the existing customer base? The good thing about our business and our customers are we are very naturally intertwined, meaning to say, if our customers are growing organically, we automatically grow with them, in the sense like, while of course we have to continue to innovate our products and continue to offer best-in-class services, but the arrangement or the relationship is quite symbiotic, so to speak, in a sense like if they grow, we absolutely grow, of course, with products and quality of service. I must emphasize. So to that extent, the growth is in some sense secured with the growth in our customers. And of course, the other part of the growth will continue to come in terms of innovation of products that we continue to offer to existing customers, and as well as net new customers that we intend to acquire. So good part of growth will certainly come from our existing customers who are marquee customers. And of course, with the new products and our ability to create a differentiation for ourselves, that should really promote us in terms of acquiring the net new logos.
Right. And, you've raised close to about $100 million in funds till date, right? Are you looking to raise more funds in the near future?
No. We are well funded in terms of our balance sheet. So our business, and as I've said, we have become quite efficient, and our capacity is quite aligned to demand. So to that extent, need to run our existing business, i.e. the capital, we don't see the necessity.
So you don't need this. You don't see the necessity right now to raise any funds. You're well capitalized, and you have big growth projections as well for FY25. But others, thank you so much for joining us on the show today, and we wish you all the best on this journey going forward.
Thank you. Pleasure is all ours, and wish you best of luck as well. Thank you.
Thank you. Moving on, homegrown hair care brand Arata has bagged $4 million in its Series A round. Ritu Singh has the founders of the company with her. Ritu, it's over to you.
Homegrown hair care brand Arata has secured $4 million in its Series A round, led by Unilever Ventures, which is the venture capital and growth capital arm of Unilever, with participation from Bold, which is L'Oreal Venture Capital Fund, as well as existing investor Skywalker Family Office. Now, this funding also marks L'Oreal's Venture Capital Fund's first ever direct investment in an Indian startup. Now, Arata, which has grown 3 times in the last 12 months, plans to use the money to invest in innovation, in consumer research and distribution of its products. But for more on the company's growth plans ahead, joining me now are its two co-founders, Dhruv Bhasin and Dhruv Madhok. Dhruv and Dhruv, thank you very much for joining us here on Startup Street. Dhruv, Madhok, let's start with you and your namesake and how you got around to, starting this venture, what your approach to building the brand has been and what you're really solving for as a gap that you identified in the market.
Sure. So thank you so much for having us here. What we identified was we saw that there was no challenger brand that was really a hair expert in the country. And we saw that, legacy hair care brands had kind of made, one-size-fits-all solutions specifically for hair care. So we saw a need for specializing and premiumizing hair care specifically for the Indian market. And what we broke it down into concerns, enhancement, maintenance, styling, and all of these specifically for Indian hair care. So the objective was to make a specialized and premiumized brand for Indian hair.
Well, Dhruv Bhasin, then, you've seen a 3 times kind of a growth in the last 12 months alone, and you have about 72 crores in annual recurring revenues. Do you expect this growth momentum to sustain or pick up pace from here? And what kind of monthly sales are you doing? What about profitability?
So it's a great question. I think something that we have really focused on is building a sustainable business, specifically in the last 2 years. So this fundraise actually comes on the back of a very sustainable business that we have already built. Like you mentioned, we've seen exponential growth of about 3x in the last 12 months. We're looking at about a 72 crore ARR this year. We have 72% gross margin, and year to date, we're pretty much EBITDA flat. So even it seems counterintuitive that despite having such exponential growth, we've been able to maintain profitability. Is something that we've really worked hard on. But yeah, we are going to continue to grow and set a standard for sustainable growth. All while we're doing this, all while maintaining a very strong customer base and retention metrics.
Well, Dhruv Madhok, let me ask you then, for the sustainable growth, how are you going to use this $4 million in Series A round that you raised? What really got L'Oreal to sign this check, the first in terms of direct investment in a startup, and how exactly are you going to use the proceeds?
So I think, we're very grateful to have Unilever and Bold by L'Oreal to, as partners in this journey. I think what they saw was, they were fully aligned with our vision and mission of making, just really improving the hair care experience for the Indian consumer. And how we plan on deploying this capital is, to further double down on what's working very well for us, which is research and development. Continue to make highly effective and innovative solutions for the Indian hair market, covering both hair and scalp requirements. Also investing heavily across, casting a wider net and content and marketing. So building Arata as an expert destination for hair and hair beauty. And last but not the least, and the most important aspect of this business, we believe, is talent. So having some of the best minds from across the country working across various functions, whether it's in formulations or operations to marketing, I think we'll continue doubling down on what's working well for us, and that's all of these things.
Well, let me ask you then, in terms of future, Dhruv Bhasin, you currently have about 4 products, and that's all in the hair category. Are you getting to look into any adjacent categories in the near future? Any new additional products that you have in the pipeline you're looking to launch?
Right. So we actually already are in, so 85% of our revenue comes from hair care. The other categories we're in is body and face care. What we're actually very diligently looking to do in the coming year and a half is, instead of actually adding categories, we're going to be shedding categories. So on the back of building ourselves as the hair beauty experts of India, we're actually going to be shedding our body care and face care products, and we're going to become a comprehensive 100% hair beauty brand. So not adding any categories, we're going to be shedding categories and building expertise in what we're very good at.
Okay, well, Dhruv Madhok, in this case, let me ask you how much of your sale is really coming from your website, your own website, and how much through other marketplaces that you sell through? And again, in terms of the distribution, what has been the strategy? Do you intend to remain an online-only brand, or would you want to have a physical presence too?
Sure. So, at the moment, we're doing north of 15 lakh units every year across our website, e-commerce, and quick commerce. And we're very well replicated across, e-commerce, multiple warehouses, Q-commerce, 2,200 plus dark stores across the country. We've really made it, very accessible for the consumer to buy the products wherever they are. And an interesting fact is 60% plus of our business is actually coming from tier 2 and beyond. And to answer your question about the revenue split or the business split, 30% is coming from D2C and 70% from e-com and Q-com. And we believe that, having 30%, or having a minority revenue contribution from D2C and nurturing the consumer on D2C is very, very important for us to keep getting great insights and be close to the consumer. While we can have distribution across e-commerce and quick commerce, D2C is also an important channel for us.
On that note, it is time for us to head into a short break. But coming up next, specialty coffee chain Blue Tokai recently bagged $35 million and is now looking to expand into the bubble tea market. We check in with the firm on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Specialty coffee chain Blue Tokai, which recently bagged $35 million, is now looking to expand into the bubble tea market with its eyes set on making an acquisition in the space. That's a CNBC-TV18 exclusive. Not just that, after already expanding to Japan, the coffee startup will also open a new cafe in the Middle East. In a chat with Aishwarya Anand on the sidelines of Founders Retreat in Dubai, Matt Chitranjana, the CEO of Blue Tokai, elaborates more on the plans. Take a look.
When you started out, you were the only specialty coffee that we had in India, right? So I want to understand that what led you to start the business?
Yeah, so if I look at how starting Blue Tokai was really a reflection of my own personal coffee journey. So in college, I used to be a Starbucks drinker, but that was really for the caffeine kick, to help me study. It was only after graduating, and then I moved to San Francisco and got exposed to specialty coffee. And that's when I found that coffee could be so much more than just a functional drink. Where it comes from, how it's roasted, how it's brewed, all can lead to this incredibly flavorful beverage. And so as part of that, I started roasting coffee on my own as a hobby. So fast forward several years later, I moved to India, I was working there, and I was really struggling to find a good cup of coffee. So there were places that were having, commodity coffee that was roasted a long time ago. It didn't really have the flavor that I was used to and
that you were looking for.
And so I found that there were estates that were growing very high quality coffee, but they weren't focused on the domestic market. They were focused on exporting that coffee outside of India because they didn't feel that Indian consumers were ready to appreciate the quality of coffee.
Yeah.
So my partner and I, Namrata, we felt there would be other people like us who were looking for a flavorful cup of coffee.
Correct.
And so we went down and convinced those growers to sell us their export quality coffee, and then we started as a small kind of mom and shop business.
So I want to understand that how many mom and shop did you start out with? Was it just one? Which city did you start out from? And today, if I have to ask, how many stores have you already expanded to in India?
So the first cafe was in a small gully in Saydul-Ajab, which is kind of an urban village of Delhi.
Correct.
No natural footfalls, but we found that people were seeking us out just for the quality of coffee that we were offering.
Correct.
So that's when we found that having our own physical cafe and physical footprint was really important. And from there, we started expanding. So now we're at 130 locations across 7 cities in the country.
There have been reports that have suggested that you're planning to get into the boba tea market. Is it true? Are you looking at acquiring any company there?
Actually, I think it has a lot of potential.
It has a lot of potential, correct.
If I look at the way that India is going to develop, it's probably more likely to take the Asian route than a Western
100%.
route. And if you look at Asian markets, bubble tea is as big as coffee.
Okay, so by when should we expect an announcement on that?
I think it'll be a couple months.
Couple of months, okay, all right. Let's talk a little bit about the business. I want to understand how is Blue Tokai doing? What does your revenue look like?
Just under a 400 crore run rate right now.
Okay.
And last month we did turn EBITDA positive on a company level. So that was a great achievement for us.
Okay, and what is the target for next year?
Next year, in terms of revenue?
In terms of revenue?
We're looking at around 60 to 70% growth.
Okay.
And targeting a 4% EBITDA margin.
Any plans to go the IPO route? Because that's the newest trend.
So
yes?
I think, there are very few beverage companies, and I think that if we're able to reach, we have a clear path to reaching this 1,000 crore number with a 15% company level EBITDA margin. I think that would be a very attractive IPO candidate. So that's our goal.
So what's the timeline that you're looking at?
I think it'll take around 3.5 years for us to reach that.
3.5 years. Okay, all right. You've just raised funds. this year, and I want to understand where did the capital go to, and in terms of what's more in the pipeline, could you elaborate a little bit on that?
So we'll be going deeper into our existing markets. We'll be looking at expanding into a few new cities in the next year. And then as part of that, we have to upgrade our back end to support the growth. So we're actually in the process of opening a new state-of-the-art bakery with Suchali's in Bangalore. That'll be open next month. We'll be upgrading our roastering capabilities as well. So, but the main capital we'll be going to is opening up more cafes for us.
Could you just put a ballpark figure on the kind of share that you're getting from your online sales, offline sales? What does the revenue mix look like there?
Right now, the majority of the revenue comes from the cafes. So around 80% of the overall turnover is coming from the cafes. The remaining is split fairly equally between the D2C and the B2B business.
What are the global expansion plans like? Yeah. I mean, how many countries are you currently selling your coffees to? And experience center-wise, are there countries that you're looking to open to? And what's the plan with the UAE market?
Yeah. So actually, 2 years ago, we opened up a subsidiary in Japan. So we've been in Japan for the past 2 years. And 3 months ago is when we opened our first cafe there. So the idea is that we'll be expanding and opening up a few more cafes in Japan there. We see that as a market that has a lot of potential. Now, India is very close to UAE. There are a lot of Indian consumers within the UAE who are aware of the brand.
Diaspora,
yeah. So we see as UAE as a really the next market that we're looking at. So we're currently evaluating partners, and we expect to do something here in a few months, actually.
Okay. So are you looking at you're looking at opening cafes?
Opening cafes.
Opening cafes.
Yeah.
Okay.
GenAI translation platform Devnagri is anticipating a 200% growth year-on-year and is expecting its revenue to touch $3 million in the coming months. During a rapid-fire round at the sideline of Huddle Global in Trivandrum, Himanshu Sharma, the co-founder of Devnagri AI, revealed his 10-year vision for the startup. Take a look.
All right, Himanshu, what is the name of your startup?
My startup name is Devnagri AI, and we are helping businesses to localize at scale.
Okay, wow. And what exactly is your startup in one sentence?
In one sentence, we are into conversational AI in multiple languages.
Okay, and what is the problem that you are solving?
90% of people in India don't speak English, and we have only 0.2% of content in local languages.
All right, and what's the solution to that problem?
We have real-time translation application available, which can translate applications, websites, voice bots, chatbots. So understand the whole gamut of, as a brain of a company, can communicate into multiple languages, not restricted to India, but all world.
All right. And what will you do in revenue this year?
This year we'll be touching about 3 million.
And what is the projected revenue growth rate like?
We are growing about 150% year on year. I see that this year we'll be doing about 2x, 200%. Next year also, I think we will do 200%.
Okay. And what's the one key differentiator that sets you apart from competitors in this space?
We bring context to translations.
All right. And what's the one wow factor in your startup journey thus far?
I was appeared in Shark Tank.
Wow, nice, good one. What kind of funding have you received as of yet?
We have raised $1 million till now. Looking to raise about 5 million.
All right. And last but not the least, where do you see yourself in 5 years from now?
You can see it as a brain of an enterprise where it can speak in and out any language, so it will be easy for their customer relationship management.
All right. On that note, great speaking with you. I hope it goes well. Thank you very much.
Take care.
And with that, it is a wrap on this edition of Startup Street. For news and updates coming up on the other side, stay tuned.